I know that you guys are really big on total transparency, and it's something that is, that's actually one of the core values of Pivot Wealth as a business, is that painful transparency. And it does it sometimes makes things more challenging than not. And I think that that's one of the issues in the socially responsible space, or what the label that you put on it for people that are looking in there. And I know we've done it. We were just looking at some stuff for a client that had some really specific, things that they didn't want to invest in. And it was really challenging because the transparency is certainly lacking. So I think for anyone looking at going down this path, I think we'll talk a bit more about what you guys do in detail, but I think making sure that you understand before you dive in, because it's a space that I think it's almost to the point that some people, in my view, have taken advantage of the demand for this stuff, and doing things in a way that is, ridiculously sort of almost unethical.
Oh, you're spot on. You're absolutely spot on. I mean, there are plenty of my peers who you can throw that accusation at, and I think it's a really important point to make that Australia ranks very lowly in the list of OECD companies, or the developed world, shall we say, in terms of the level of mandated disclosure around financial service products, and particularly fund management products. Compared to other parts of the world where portfolio managers have to provide a high level of transparency around their products, here there's very little. And you can quite often see listed equity products, portfolios of listed equities, where the manager will only show the top 3 or the top 5 holdings. So to your point, if I claim that I'm running a really environmentally friendly portfolio here, and a portfolio of 50 stocks, but I'm only telling you what 5 are, as long as those 5 look environmentally friendly, how on earth does an investor in that product know that I'm not just investing in coal companies on the sly? And the problem with that, of course, is that if I've committed not to invest in coal companies, and coal companies form a large part of the benchmark that I'm measured against, then what happens if all of a sudden the coal price goes on a tear? These coal companies start going up and outperforming everything else. If my clients can't see what I'm investing in, then the unscrupulous manager will start buying his coal companies, even though it completely contradicts the values that he's attached to the name of his product.
Yes.
It's a real challenge for consumers everywhere. But particularly here in Australia, and that challenge extends to the fact that our economy is particularly highly weighted towards some areas that are now considered no-go from an environmental or a social perspective. Coal mining is the obvious one.
It's interesting. I think that if you look at the ASX, which is heavily weighted to the top 10 companies, they represent a huge proportion of the shares, and you just look through that list and go, who really? And I know that the banks are pretty good, but I think that there's a lot of people that go, well, really, would you consider them an ethical company? Woolworths, Wesfarmers, again, like some of the practices for their suppliers. And then you got BHP, and when you look at those companies, when you take them out, you're basically there for the small companies fund. So it's not without its challenges, I think.
That is the fundamental challenge for domestic investors here in Australia, and the commercial challenge is this: is that if you purport to have values as to what you will and will not invest in, and you stand by that, you impose upon yourself a rather large set of handcuffs, because by not investing in those big sectors, you're going to find it very difficult to generate a performance that's absolutely in line with that of the broader market indices, the benchmarks that we typically use, and which observers use to measure how good or bad we are. So it's called basis risk. But taking that basis risk imposes upon us a risk that we are going to look very different from our peers and from the benchmark. And commercially, a lot of the big end of town, in my opinion, are too fearful of that. So they end up with producing wishy-washy product that has plenty of fine print around, or plenty of excuses as to why it might have to have a tiny exposure to coal or a tiny exposure to this, that, or the other bad activity, just so that they can manage the commercial risk that they face.
Yeah, and I think it's a good point for people that want to invest in this space, because there is such a focus on people being measured against the benchmark. And as we've just discussed, that if you strip out those bigger companies, you do end up with something that's considerably different to what the overall share market return is. So I think that there's certainly a lesson that you need to be prepared for that.